Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and markets closely associated. And as promised, we're going to have an election special today, if you will. But before we do that, Miles, let's recap the week as we always do.
So we're starting out coming off of what could be some short-term highs here over the last week or two in a number of the metals. So we're actually going to take a look at where we're at from the most recent highs, which have all occurred in the last 7 to 14 days here for the metals. So starting with gold, we're down about 3% from the 2685 top that we put in. Silver, a little bit more, as is usual, down about 7.5% from the almost $33 top, $32.95, but still holding above $30. Platinum down about 6.7% from the 1016 top, and palladium down around 7.2% from 1120. So we're seeing platinum and palladium holding side by side. Silver, as always, whatever gold does, silver does a little bit better. And gold, of course, is the steady eddy here. Now, with 30 days to go and on the heels of a pretty significant move up, I know when we were getting ready for the show, we kept looking for some support levels on gold, and I kept telling you where I thought they were, guys, and you kept saying, no, there's no way it's all the way down there. But yeah, it's because we've come up this much in such a short period of time. So with gold putting in these significant highs, 30 days out on an election, Tori, I know you've put a ton of research in this week, so I can't wait to hear what you got to say.
Well, I think it's all of us. I mean, it's been interesting to kind of see the synopsis, and I'll start by saying we have to remember that every year is unique. Every setup is unique. Every administration is unique. Parties have even changed over time. I mean, I went back and looked at the last 13 elections back from 1972 to now. And what I did is I looked at the initial response, and then I looked at the next year's charts to see what a little bit slower delay was. And Robin, you and I were talking about this prior to, but what you tend to see is an initial reaction in the first couple of days, followed by a short-term 2-week reaction. Now, when a Democrat wins...
And this is from an inauguration.
No, this is actually right at the time of the election. So This is going to be Wednesday morning, starting till probably through the end of the week. You see this initial little spike or a drop, and it tends to be about a 0.5% spike if a Democrat wins and about a 0.5% drop if a Republican wins, followed by a reversal in that. Okay, so in the next 2 weeks, the Democratic win, you saw about a 1.1% decline in the gold price. So initially a 0.5 point spike, followed by on average over time a 1.1% decline. So that's the short term. In the 6 months following that, so you get, to your point, past the inauguration, into the economic trend to be expected, it actually reverses and goes the direction of the next day's response. So the Wednesday response tends to be what we see happen in January through May of that
kind of the
term.
Honeymoon period.
Right, yes. Yeah. And so it's kind of fascinating to see that trend. I haven't seen anybody talk about that. I haven't seen that broken down anywhere. That's just my consistency that I stumbled on when looking at all of these charts, is that you have an immediate reaction followed by a 2-week to 8-week reaction, followed by a subsequent reversal into a little bit more of an intermediate term response.
And then you can expect the opposite with a Republican victory.
That's right.
Okay, so then let's go out at the end of the term, let's say 4 years out. What does it look like for either a Republican or a Democrat in the White House?
So really good question. So now we're focusing on price. What does the spot price of gold do? 11.2% climb in the gold price on average during a Democratic White House administration. A 10.2% increase over the 4 years of a Republican administration.
So virtually the same.
Yes. I mean, what is that, 11% difference? So, it's still statistically significant. That difference is that it does climb more during a Democratic 4 years than a Republican 4 years, but pretty negligible.
Pretty negligible. And let's go back to, do you have Obama and Biden and Trump, what their first terms look like for the price of gold?
I do. And the unsafe thing here is that, again, the complexities involved with each administration are unique.
Yeah.
Because the legislative branch that is helping with the budget and the spending and passing the
They
laws.
control the purse strings.
Right. So is that a Republican-dominated legislative branch or Democratic, and which is which based on president being Democrat or Republican?
That's
Those
going
are
to
the
be very
complexities.
telling for the Obama administration, because his first year, the price of gold really took off, and then his first term, his second term, it reversed.
That's right.
That's because the Republicans had control of the purse strings.
There you go. So a lot of it has to be the administration versus the legislative branch control in terms of your focus. However, in Obama's first term, gold went up 90%, okay, in his first 4 years. In the subsequent 4 years, in his second term, to your point, it dropped 33%. So all said and done, gold went up 34% during Obama's 2 terms net. In Trump's 4 years, gold went up 64% in his 1 term. Okay, now that was boosted in the COVID year. That gold went up 19.3% because of the COVID response, which one would expect. But other than that, I mean, he had a 8.5% and a 13.5% climb in 2 of his 4 years. The third year was down 2%. The Biden administration has had a terrible gold experience. So they're up 40% in those 4 years, similar to Obama's first term. So what does that mean?
Well, I think you have to see the Harris administration, what their policies appear to be, and then the Trump policies. The Harris campaign insists that public policy objectives need to be about ensuring that everybody ends up in the same place. And she favors an equal distribution and giving resources based on equity. Trump, on the other hand, now, he's not going to exactly be a fiscal conservative.
I agree.
Okay. I mean, his trade tariff position is not a free market position, but domestically, I think you can expect that he will pursue tax cuts and deregulations, while the Harris administration could be counted on to do just exactly the opposite. Yeah.
No, I think that that's right. And we have to remember, too, that just these last 4 terms really are rooted in the financial crisis, the global financial crisis of '08.
Yes.
Right. So
I
all
think
of
that
the
is
response,
that is the anchor.
Yes.
That is the defining pivot for where we are going, because no matter who sits in the White House in January, there's a $36 trillion debt, with the interest on the debt now eclipsing military spending, and by the end of the year should be eclipsing Social Security spending. So that is the unmovable object facing either juggernaut. And I don't know how either administration is going to pursue that, because it's not going to change. It's only going to continue to get worse. And I think you'll see a continued erosion of trust from the American people, no matter who wins.
I totally agree. And again, the general trends are that for a Republican presidency, you do tend to see the gold price also climb. Okay. Mm-hmm. But in that short term, in that first year, it's been down. It was down with Reagan 1, Reagan 2, with George Bush, and then with George W. Bush, it was also down, and then it was flat in Bush's second term. So those are all down in that intermediate term. That's something to me to expect in a Trump presidency, that would continue. The one exception was Trump's first go-round, and I think a lot of that had to do with, you talk about uncertainty. Mm-hmm. The whole world did not know how to respond to the fact that he had won that election.
Correct.
There was this general sense of global uncertainty and what's going to happen here and what's nationalism going to kind of do and all that. So we're kind of along for the ride.
Well, we are, but when you look at the global consensus, it is against Trump, with possibly the lady in Italy and Netanyahu in Israel, and maybe 1 or 2 leaders in Latin America. Mm-hmm. The global consensus is they do not want Trump back in. Now, they have their agenda, and I think that We see that mirrored in our press and the federal bureaucracy as well. So there is a consensus against a Republican administration.
Well, I think, too, you can look at the globalist agenda, right? So the globalists who want a one-world economy and a one-world government kind of push certainly try to minimize and negate the significance of gold, whereas BRICS, for example,
don't.
aren't party
completely the other way.
Exactly. So we'll have to see how that all plays out as well. The de-dollarization effect is really ramping up, and all this data can go right out the window just as a result of that. Because, again, I only went back 50 years, which is post-Bretton Woods, too. And so we're in a fourth turning, as we've talked about earlier on this show, and all this data could be worthless. But I do think it'll be interesting in the weeks following the election to see what happens. And to bring this back, and I'm going to make one other point, the expectation would be with a Democrat win, you'd see an immediate first day little spike. Mm-hmm. With a Republican win, you'd see an immediate first day little drop. Okay. So we'll see what happens. And then that reverses in the subsequent couple of weeks. Now, what we haven't talked about is demand. So all we've talked about up to this point is price. Fascinatingly, it's the demand where the interesting data is, because it's double in the 4 years on average. Well, first of all, in the first year, and then the subsequent year after that, the physical demand after a Democratic presidency win is twice as high as it is after a Republican presidency win.
And now, is that domestically here in the U.S.?
That's domestically. So that's data that was pulled, from the U.S. Mint, okay? And it's not an insignificant number. I mean, you're talking about a doubling. And so to me, that was really fascinating to hear and to realize that we focus maybe too much on price and not enough necessarily on the physical demand, because the physical demand is telling a story that reeks of the uncertainty and the concerns for geopolitical tension.
At least here domestically, but in the last few years, like you brought up earlier, the BRICS consortium has really flexed their muscles in physical demand and also central bank demand globally. So regardless of what domestically we do and what we see, the global demand for gold continues to rise, and it's rising hugely.
Well, I'll tell you another, and you said this off mic, which I forgot about, but you said something about what gold's doing right now.
Yeah.
What story, in your opinion, is it telling right now this week with this drop?
It does look like the Trump campaign is gaining momentum in the pivotal states, the swing states, and the Harris campaign is losing momentum. So I do think the market is starting to anticipate a Trump victory.
Well, to support that, what I also stumbled on was that in the 6 months leading up to an election that a Republican ultimately won, the gold price had a very strong 6 months. In the 6 months prior to a Democratic win, it was down to flat. Well, we all know what the last 6 months have been.
Right.
So is gold predicting a Republican win? And to your point, maybe in this cycle, if we continue to drop and the market insiders are positioning accordingly, the big money isn't going to be caught on the wrong side of this deal.
Right.
If it looks more and more like Trump will win, then maybe gold is telling us a story.
Maybe.
There's a lot of stories to play out. Are we, in all fairness, regardless of the next administration, it's really going to be about geopolitical tensions and crisis. That's what we've seen in these previous terms as well. So are we in a crisis? Yes, we are. Are we in geopolitical tensions right now?
Yes, we are.
Yes, we are. So Trump talks the talk of saying before he even is inaugurated, he'll have a truce in the Russia-Ukraine conflict. I would imagine that's probably not possible. But if the markets believe it, and we know that the current administration has not been successful in that, and they've had 2.5 years to achieve that and haven't, well, then that may tell a story too.
And you have President Biden up at the microphone just in the last day or two telling Israel to take out Hezbollah, finish the job, which is right against what the Harris campaign wants. And you have to wonder if he's encouraging them also to go after Iran. It's almost like Biden is trying to kneecap the Harris campaign.
And that's been on a few fronts. So that's kind of interesting. I think there might be some resentment in the mix. And I don't want to throw out conjectures, but it is interesting to see that happen and what would really transpire afterwards. But again, let's focus initially on the early trend and then be patient on the interim trend. But we have to wait and see what transpires in those 6 months geopolitically, economically, and then getting a sense of clarity on the fiscal policy intentions and economic policy intentions of the administration that wins. And that will tell much more of the story than past elections.
Well, that's going to do it for Golden Rule Radio. Thank you for listening.
If you liked what you heard, you can hit the subscribe button, ring the bell, or better yet, head on over to our website. We can be found at McIlvaney.com. We're also on Twitter at ICA Gold and Facebook at McIlvaney Financial. And as always, if you'd like to discuss your personal portfolio with one of the advisors at McIlvaney Precious Metals, you can give us a call. We're at 800-525-9556. Thanks again for listening and have a great week.